What's going on, everybody? Welcome back to the channel. Happy 4th of July to everybody. Hope everybody has a safe and fun 4th of July. I know stuff can get a little bit crazy on the 4th, so stay safe out there. We're about to head on down to the lake and to the beach for a couple of days. So I wanted to kind of get this video out and just discuss really what we've seen over the past week with KEEL infrastructure. Now that a couple of days have passed and gave people a chance to kind of settle down a little bit. When it first happened, you know, if you don't know what happened, KEEL, I'm sure you know what happened, but KEEL dropped by about 15% on Thursday, and it freaked a lot of people out. And if you were paying attention the next day in the Canadian markets, because the Canadian markets were open on Friday, KEEL seen a nice little bounce, right? It was up about, I think, a little over 5%, which is good to see, found the bottom. You know, it's like I've been saying, the overall sell-off was due to the Meta announcement and how they were going to be selling excess compute. And you've seen a broader sell-off of all the neo clouds, all the AI data center infrastructure plays. They all started selling off, right? Just because of that news. And it's a bit overblown in my opinion. Well, not a bit. It's a way overblown in my opinion. Meta's not just going to come in and take over everything, right? And if I had to guess, I think Meta said that just to kind of get a pop in their share price. They seen, you know, what SpaceX was doing and kind of wanted to get in on a piece of that. Just my opinion, just my speculation, but I really don't think it's going to be a big deal long term, because you have so much demand and you have many players out here that are able to provide that demand. And KEEL is right on the forefront of that and is in a great position to provide that demand once they get everything rolling. So anyway, Thursday I did buy the dip on KEEL infrastructure, averaged my costs down a little bit. My overall total in my portfolio now when it comes to KEEL is about 14%, which is probably one of the biggest percentages I've held of a company before. Just goes to show you kind of my conviction. Is it a little over leveraged? Probably. I might, you know, admit to that. But I just have such high conviction in this name, and I really do think it can go places if they start executing, you know, by end of summer. And it's like I've always said, you know, come into summer, if we ain't heard anything from KEEL, if we ain't heard any announcements, if we ain't heard any meaningful updates, then it'll be time to kind of reevaluate our thesis, reevaluate our plan, and, you know, kind of go from there. But as it sits right now, nothing's changed with the company. Nothing came out, you know, sorry for that loud ass car. Nothing came out, you know, news-wise that was detrimental to KEEL's thesis. They, you know, I'm going to keep saying this. They got a balance sheet of $1 billion just sitting there waiting to execute on lease deals and lease build outs. So again, we just seen a broader pullback. People freaked out because they haven't seen a big old dip like that before, especially in the name they might have been over leveraged in, which is very possible because over the past couple of weeks, KEEL has been very hyped up. You know, it's seen and gotten a lot of attention. It got added to the Russell 3000. So a lot of things have just been happening in the KEEL infrastructure world, and the newer investors into KEEL, which even me, I consider myself a newer investor, but I'm not freaked out by little stuff like that. You know what I mean? The newer investors into KEEL that might have put a little bit too much in, you know, started freaking out, even calling for Ben's removal because the price fell, which is just absolutely absurd. So, you know, I just wanted to come on here and reassure everybody that the KEEL thesis is still intact. Everything's still moving forward as planned so far. Nothing's changed. Our investment thesis is still strong. We're still continuing to dollar cost average into it. I might pull back on that a little bit now because it has gotten to be such a big position in my portfolio. But if it does keep dropping, I'm going to continue to buy more regardless, right? That's just how things go. That's just how it goes. And, you know, another thing is yesterday I was on live stream looking at the KEEL chart alongside others in the same sector, and they're almost identical, right? They went up the same, they're dropping the same. So again, it's not just a KEEL thing. And if we zoom out, like I was saying yesterday, KEEL has ran up over 150% over the past year, right? People are still up massively in KEEL. You're going to see pullbacks, right? Shit don't go up in a straight line forever. That's not how markets work. If it did, everybody would be rich. and everybody would be an investment genius, right? That's just not how it works. But if you zoom out and look on the KEEL chart, it has bounced off of the perfect support level from the highs back in May. So overall, everything's still looking good, guys. Everything is still looking good. So, you know, come Monday, we'll see what happens with the KEEL price. I have been looking into the 2028 LEAP options. I know I keep bringing it up. I just have not pulled the trigger on it yet because I haven't really, you know, I don't want to really overpay for them. And if it stays down under $5, I think I'm going to eventually pull the trigger. We'll see what happens on Monday. But the LEAP options I'm looking at is the $7 January, I think it's January 28th, 2028, $7 LEAP. So we're going to look at that because the way those work is you get access to, or you get to control 100 shares at half the price, right? So 100 shares right now is probably like, well, where it closed on Thursday is probably what, $465 for 100 shares. If you buy the 2028 LEAP option, you get those same 100 shares for like $200. So, and it adds a little bit of leverage. So, you know, that's something I'm looking forward to, or looking into. Please don't follow me into that. You know, it's definitely a risky play, but it's just, it's an instrument you can use if you have, you know, if your thesis is very bullish on KEEL infrastructure, if you believe they can execute by then. And the reason I picked the January of 2028 is because if their timeline is correct and they execute on what they say they're going to, you know, they should be fully powered up and leased out by 2027. And if that happens, those call options would absolutely explode and they would print some good profits. So that's something I'm going to look into next week. We'll see what happens. Like I said, the Canadian markets opened and it did start bouncing and went up. So we'll see where it lands on Monday morning after the 4th of July. Normally this time of year can be pretty volatile. The markets can drop this time of year in the summer. And it's a, you know, midterm year, so you always got to keep that in mind as well. Markets are cyclical. They seem to follow past trends. Not always, but, you know, a lot of times it does happen. So anyway, guys, hope everybody has a good 4th of July. Please stay safe out there. Go out there and enjoy yourself. Go out there, spend some time with your family. Go outside, touch some grass. Don't worry about the markets. The markets are going to be here when we get back. They might not be in the spot you want them to be, right? Your portfolio might be down. It might be up. Who cares? At the end of the day, we're still alive to invest another day. We're still alive to put money into this market. We should be grateful we have the opportunity to invest in incredible companies, have incredible opportunities that other people don't have. So y'all have a great 4th. Please be safe. You know, happy 250th anniversary to America. If you ain't from America, we're a little excited. It's the 250th birthday of America, which is very, very cool. Glad to be an American, and y'all stay safe. We'll see y'all on the next one.